Hello friends, welcome to my second video in the EFRD series. If you have not seen my first video, please watch that video first because I'm going in a sequence, and if you follow the sequence, you'll understand things better. If you have already seen my first video, you now also know, if not too much, but at least a little bit about Financial Accounting Standard Board or FASB. It is a body that establishes and maintains US GAAP. Now let's start today's session by beginning with discussing about US Security and Exchange Commission or SEC. The US SEC, headquartered in Washington DC, is an independent agency of the United States federal government. Its mission is to protect investors, maintain fair, orderly, efficient market, and facilitate capital formation. To achieve its mission, SEC enforces the statutory requirement that public companies and other regulated companies submit quarterly and annual reports as well as other periodic reports. Well, these quarterly, annual, and other reports which companies files with SEC are also made available to general public by SEC. So how does SEC makes the report available to public? Well, SSE has an online database system called EDGAR, EDGAR. EDGAR stands for Electronic Data Gathering, Analysis and Retrieval. Investors can access reports filed with SSE through EDGAR system. If you want to know more about SSE, please visit their website. The web address of their website is provided in the screen. If you want to access financial statements and other reports filed with SEC, use the link provided in the screen and search by company's name as shown in the screen. If you need guidance on how to retrieve the financial statements and other reports from EDGAR, follow the link provided in the description of this video. Now, let's see what are the 4 financial statements that are required by SEC for all publicly traded companies. The 4 financial statements include balance sheet, income statement, statement of cash flow, and statement of changes in equity. Also, notes to financial statements form an integral part of the financial statements. But what do these notes contain? Well, notes provide informational disclosures which help the users of financial statement understand the financial statement better. Friends, we are still in the introduction part of our EFRD series. Therefore, I'm sticking to the basics. However, in the later videos, I'll be dealing with the financial statements in detail. Friends, data found in the income statement, statement of cash flow, and balance sheet are used to calculate important financial ratios that provide insight into how the company's finances being managed and potential issues that may need to be addressed. The balance sheet, income statement, statement of cash flow, and statement of changes in shareholders' equity provide different information on a company's financial position, but these accounting staples are all interrelated. Let's have a look as to how they are interlinked. In the image shown in the screen, we have opening and closing balance sheets, statement of cash flow, income statement, and statement of retained earnings. Balance sheet is connected to income statement through changes in retained earnings shown in the statement of changes in shareholders' equity. As shown in the figure, net income figure of 40 is imported in the statement of retained earnings from income statement, and the year-end retained earnings of 130 as shown in the image forms a part of the balance sheet. Similarly, other interconnections are highlighted in blue in the figure. Friends, apart from current year information, financial statements also provide prior year information next to current year for comparison. On the screen, you can see Alphabet Inc. consolidated statement of cash flow. As you can see, it has 3 years consecutive data. It helps analysts compare past performance to present and make a determination of future success. Friends, until now, we discussed financial statements prepared using past data, which presents a basic financial picture of any company. However, a company may also prepare prospective or pro forma financial statement, which presents the projected information about a future period based on set of assumptions. When prospective or pro forma financial statements are prepared, significant accounting policies and assumptions needs to be disclosed. Friends, the use of prospective financial statement is growing as companies require them to obtain financing. Sophisticated investors and bankers wants to know what will rather than what did happen. Apart from obtaining bank finance, prospective financial statements are needed for a number of reasons, including private or public placement and internal management decisions. Guys, that was all for today's session. Give it a thumbs up if you like the video and post your comments or suggestions if you have any. If you want to download the PowerPoint presentation I used for this video, please use the link provided in the video description. If you want to follow this series, why not subscribe? See you soon.